We're hosting this Startdeliver together with our friends at Float. And today we're talking about the CHURN Iceberg, or more importantly, how to avoid hitting the iceberg, because it will have devastating effects to you. And we want to help you there. So we have roughly a half an hour together. And who are we? So first off, I'm Johan Nilsson. I'm CEO and one of the founders behind Startdeliver. We make a customer success platform. Have a long background in SaaS, and customer success is my home turf and passion. I'll hand over to you,
Fantastic.
Jannis.
Yeah, thank you, Johan. My name is Jannis. I'm the COO and co-founder of Float. We provide financing, revenue-based financing, specifically to SaaS companies from the Nordics and across Europe. And that is basically a flexible credit facility to finance your growth, for example, in customer acquisition and so forth. And it's a great alternative or a complement to venture capital. And it can do things like, extend your runway and take you to the next equity round. Wonderful. We have a full agenda today, so let's go through it. We only have 30 minutes, as Johan mentioned, but we want to speak briefly about the importance of NRR, or net revenue retention. And with that also comes the topic of churn. We want to, spell out a little bit how you can spot problems with your churn early on. And then, as you saw from the title of this webinar, to see what is actually the effect of lagging churn, which is a super interesting concept that requires to look a little bit deeper.
Yeah.
We also see often patterns, and I know Johan can speak about it, that churn is actually not prioritized, especially in the early stages, until it's too late. It's related to the lagging visibility of churn. And that brings us to the question, how can you make management take action and take it seriously? Or if you are management, maybe what you can do to convince the rest of your company. Lastly, how to prevent churn. We have this today as more as a podcast style conversation. So you will not see too many big slides, but instead we try to keep it pretty concise and speak about the topics between Johan and myself.
And we have a chat, so feel free to ask questions. We'll have some time in the end, right, to bring up questions. We might even take them while presenting here if there's something really specific to the topic we're touching on.
Yeah, exactly. I think it just makes it more lively. So don't be shy. Please fire away. Super. So Johan is the expert in customer success and churn management. I take the role as the investor, a debt investor, but I think I can speak also for the perspective of many VC investors. And basically, first, the big why. So why is NRR, net revenue retention, so important, and churn as a growth metric? And I think any investor that you will meet to finance your company will look at your churn and your net dollar retention if you're a SaaS company, especially B2B SaaS. And that's regardless whether it's debt or equity investors. We look at it very closely. And maybe even if you think, well, I'm bootstrapped, I don't need to speak to investors, there's a reason why they look at it. It's just such an important metric. And just to illustrate that, I have two examples. So Snowflake, huge billion-dollar company listed, they're famous for having probably the best net dollar retention of any listed company. It used to be at 175%. And maybe to back up, in case not everybody is intimately familiar with net dollar retention or net revenue retention, it's the same. What it means is, what's your revenue with your existing list of customers or your existing cohort 1 year later? So meaning without any additional sales, no new clients, just the combination of upsells, downsells, and churn, upgrade, downgrade, and churn of a certain customer cohort. And it tells you basically how much your customer base is growing or shrinking. 100% means it stays exactly stable. Now, back to Snowflake. They had 175%. What it means is, after 2 years, they basically triple their revenue without winning a single new client. Think about it. 175% net dollar retention to the power of 2 brings you to 300% revenue. And you could say that's the eighth word wonder, the effect of compounding.
Yeah.
Now, that sounds too good. Now, let's take maybe the more negative example. Let's say you have a 70% net dollar retention and you think, well, it's not too bad. It's not too far away from 100%. It just means that after 2 years, you just cut your revenue in half. 70% times 70% is 49%. And that's dangerous. So net revenue retention is both upselling and churn reduction. Upselling is great, but churn reduction is table stakes.
Yeah.
And it can kill your business. For some benchmarking, it really depends on your segment and everything, but you should have, at least from our perspective, and that's also the median, a net dollar retention, if you're a B2B SaaS company, of 100% plus. Then at least you're not in dangerous territory.
Yeah.
But we're going to speak about that. It should also be north of 100% over time.
Right. No, but I think this is where we, when we met up to do this webinar, we both look at NRR and talk about NRR, or net revenue retention, a lot with our customers. You come more from the funding and financial point of view. We come more from a operational point of view. And getting into this next point is, okay, how do we, if we want to get to snowflake level, maybe that's going to be hard, but everybody can have that as an ambition, right? How can we get there? That's a question we get a lot, right? How can I actually improve my net revenue retention? And if we start with the churn part, there's of course the expansion and upgrade part. But if we start with the churn part, fixing churn is sometimes, or it's very often a big topic. But how do we do that actually? How do we do that in practice, and how do we make a lasting change? And this is where we work a lot. This is our discussions with our customers, and there are ways. The good thing here is there are ways to spot churn, and the earlier you do that, the bigger the chance is to actually improve on your churn rate. And what can these churn problems be? Sometimes it can be structural problems or company level problems. If you have a broken product, for instance, that's not working, it doesn't matter how good customer success work you do, because the customer will churn eventually because the product is broken. So you need to fix that on a company level. If you're selling to the wrong type of customers, bad fit customers, they will never be successful with your product. And it's also an impossible job to fix in terms for a customer success team. And a bad fit, sometimes this is a hidden problem that we don't talk about, both the broken product part, but also the bad fit customer part. So those are company level problems, potential problems for churn. But if you have a working product and you're selling to the right type of customers, then you need to start looking at how your customers actually are working with your product. Are they getting the value you promised when they became a customer? And here is where if you have data on this, you can actually start seeing early signs for churn problems in this data. Very common, a basic example is, of course, are they using your product? Are they logging in? Are they doing the things that create value for them in your product? If they're not, they are most likely on a churn path with you. Have stakeholders changed? Maybe it was a controller or a CFO that purchased your product, but now they changed. There's a new person there, or it's a new head of finance, or whatever the stakeholder is. And if you're not working with that person, they might switch to another product they're familiar with. Or some integrations, or are there some technical problems with your product? So there's many signs before the customer actually churns. There are many things you can look at and spot before they actually happen.
Yeah, actually spot on. I need to. One of my more difficult experiences as a manager or as a leader was I used to run like an 80 million crown or 8 million euro B2B enterprise tech company before. And we had very few very big accounts. And every time there was a senior management change, it felt like an earthquake here in Stockholm.
Yeah.
And we always tried to meet them and convince them over, but sometimes it was too late already. So spot on.
Yeah.
I want to take the point a little bit more back to the analytics and the numbers. I think
Yeah.
what Startdeliver is so good at is really keep track of all these intangible qualitative engagement changes and indicators.
Mm.
I actually want to talk briefly about table stakes again. So I almost want to say like the most important, or one of the most important things is to get the analytics right.
Yes.
And I say that, which is of course obvious, you might think. The truth is, if you Google churn calculation or net revenue retention calculation, you're going to find, the internet is flooded with it. You find hundreds of blog posts how to do that. The problem is, I would say 90, at least 80, but probably 90% of them are wrong or at least misleading. So this is kind of dangerous waters. And they're not fundamentally wrong, but they take the wrong time perspective. They tell you how to calculate churn or net revenue retention without specifying the period. Often the example is actually a month or a quarter. And that can be very comforting, because if you churn, maybe 2% per month, you might say, oh, great, my churn is just 2%. The truth is that is actually a 22%, not 2%, but 22% annual churn. And that's quite dangerous. So here again, you have compounding working well for or against you, depending whether you're north or south of the 100% line. Some other things here, how to spot the churn problems is, which cohorts do you take into account? You have to take averages of cohorts. You might always have outliers, marketing campaigns, etc. So there is a lot more science and judgment also to calculating the KPIs correctly than just, run the numbers, pour it into a model, and then you're done. We actually want to do a separate webinar just on this, but
Yeah.
it goes pretty deep. I mean, you might have things like, okay, which segment, you probably want to segment it by customers or by products.
Yeah.
So again, the famous saying, never cross a river that's 1 meter 50 centimeters deep on average, because you might have a pretty deep place in between. And if your average churn or net dollar retention looks great, it might be that two of your products or segments are, compensating for others, and then you want to fix those smaller problems.
Yeah.
Exactly. So I think now we're going to get to Johan's deepest expertise here. It's really the topic of lagging churn.
Yes.
And I want to hand over to you with the churn iceberg.
Yeah. No, but I agree. Like, it's very important to have the right to measure in the right way and actually measure this. And I know a lot of people out there being founders, building companies. It's high pace, and you kind of just want to look forward, right? But it's very important to also look at your actual data. I've done this mistake myself, just looking forward and not like a little bit hoping things are okay, backwards. But this is why we think this topic is very important, because we want to. Sometimes you're actually not seeing the big issue here, which is this hidden big iceberg, right? And why is that? Well, because in some cases the churn, you might not, even if you sign up a customer this year, they might not churn next year. They might churn 2 years down the road. And what that means, if you're a growing company, you will acquire more and more customers every year, and the churn rate is basically lagging almost 2 years. So it will only start hitting you maybe when your top line growth is flattening out, and then it's going to hit you very hard. So we want to make people aware of that. You need to measure churn, and you need to be aware that churn is usually lagging, can lag 2 years, can lag even more. So you need to be aware of this. And I think this is the iceberg symbolism here is quite good, that you kind of, if you only see the top of the iceberg and you think things are okay, you need to be aware that there can be a big one below the surface, basically. So I think that's the main point we want to make here, is that a lot of times we as a SaaS founder and a SaaS business, you're growing, you're full speed ahead, but we see too many times, unfortunately, people act on the churn problem when it is a big problem, actually, when you're the Titanic hitting the iceberg, right? We want to avoid that. So we want to do that earlier. And we're going to get to that soon in this webinar as well, what you can do. And there's a lot of things to do here. But I think that's the main point here.
Yeah, couldn't agree more. So I think we can move on. No, actually we see it sometimes when we invest in companies. Churn, net revenue retention look great, and then 6 months, 9 months down the road, it doesn't look so great anymore. And then we actually work quite actively with the companies to address the topic and also try to learn from what just happened.
Exactly. And I think that's the main point here as well. You can't hide from churn, and you need to learn from it, and you can fix it, and you can actually, we get to that soon, start being predictable. And when you can start predict it, you can basically manage it, and then you will have a lot easier discussions with your investors, potential investors, and so on. So we'll get to that soon. And why? I mean, I think this lagging is a problem, but I think also sometimes from a leadership, if we talk about management and the leadership team, we need to. Sometimes we don't dig into this enough. I mentioned two things. That basically, if you have a product, if you have a broken product in some way, or if you're selling to the wrong type of customers, those things need to be addressed, and they will only be addressed if you basically have a good understanding on why you have big churn, or if you have churn at all. You need to that's if you don't get data on it, if you don't measure it in the right way, then you will not prioritize it basically. And that's when we just keep very common is that you invest a lot in sales and you just want to acquire new customers, and you kind of forget about existing customers because you assume that you don't have a big problem with churn. And I think this is
And that
why
assumption, I guess, is tied back exactly to this lagging effect, right?
exactly.
And maybe also to add to that, I mean, if you have annual contracts, not 12-month rolling contracts, but annual contracts,
Yes.
you might not see the churn under the hood. It's like hidden unemployment or a hidden churn.
Exactly.
The customer might already have checked out and might long
Yes.
ago have decided to terminate the contract and not use your product anymore. But
Yeah.
because the contract runs another 6 months, you don't notice.
No.
But you lose those 6 months to actually actively work with the customer. So
Exactly.
it's very risky.
Yes, and this is also, I think, the sense of urgency because of this lagging effect. The sense of urgency is unfortunately sometimes low in the company around the existing customers. If you compare to if you can sign up a new big account or logo, almost the whole company is engaged in that sales new sales deal, right? But if on the opposite side, if you would know how many of your customers are actually churn risks at the moment, you don't see that's the same sense of urgency there, and that's this lagging effect again. And this is what we want to change. Basically, we want to help companies make this change because this is how you actually fix if you have a churn problem, or if you want to achieve a high NRR. This is what you need to do.
Apart from the human level, kind of the very human level that you're hitting on the next big thing and just assume whatever is stable will remain stable, I think it's on a bigger scale, it's also a question of what philosophy or culture does your company have? And
Yes.
also maybe ultimately what's the mindset of your leadership or of yourself if you're the
Yes.
B2B SaaS founder, right? And
Absolutely.
I think churn management, preventative churn management, foresight in churn management is the way to sustainably and with a long-term thinking build relationships, build companies, whereas hitting the next sales target, the quarterly sales target, is a more short-term orientation.
Exactly.
And I'm not saying that's totally bad. I think the short-term incentive really pushes you to succeed and pushes you to get better and work harder. That's
Yeah.
super valuable. But if you neglect the long-term sustainable KPIs, then I think it can become a risk. And Startdeliver, but also a general way of working, can put those longer-term KPIs on a similarly important level in your company. And just, I mean, stating the obvious, if you ask yourselves, what are how much bonus in total do you pay for new client acquisition as in the
Yeah.
company? And how much do you pay for customer retention?
Yeah.
Or let's say upsells is maybe more common.
Yeah.
And most companies that I've seen spend the vast majority on new client acquisition. And
Yeah.
that's understandable. That's what almost everybody does. But that is one of the reasons why we sometimes feel that churn and customer retention is not prioritized by the organization systematically.
Yeah. No, but I agree fully, and I think the culture part is really important, and comes from the top down, basically the founders, the leadership team. Do we see our customers as accounts or just dollars, or do we see them as customers that are going to get value from our product? We're going to help them achieve their business goals. If we do it, if we see it in the right way, it's a long-term. SaaS is not a short-term 100-meter race. It's a marathon more. It's building for the long term. And if you do that right, as you say, like if you have 100% plus NRR, then you will have customers eternally, basically, if you do this right.
Mm-hmm.
So I think you need to have that philosophy and that perspective. Although we all have quarterly sales targets to hit as well, right?
Mm-hmm.
But I think we need to balance both, and sometimes we forget about this part.
Very true. By the way, we've noticed long ago that there is a question. We will get to it. I think it's actually the next topic exactly here, that where we want to take it, right? So how to make management take it seriously. Now, this is, of course, written from the perspective, okay, you are maybe a manager at a SaaS company and you spot a problem. I guess that many of the listeners today and viewers are the management. And so it's more like convincing others and creating a sense of urgency when the numbers or when the problem actually exists. Now, I might sound like a broken record, but one of my key arguments here, again, would be analytics, analytics, analytics. So I think if you want to, stir action inside your company to really inspire change, I think you need to make a case, unfortunately. So it might not, what's obvious to you might not be obvious to everybody. Something I've learned the hard way many times again. And so I think analytics is key. And the good news here is you don't have to be a data scientist. So I really want to encourage everybody not to get scared by, too many versions of the same calculations and big spreadsheets. I would argue anybody who works in management and can work with numbers can do all the calculations needed to do pretty detailed churn and net revenue retention analytics. Now, I do want to say that, and we've seen hundreds and hundreds of SaaS companies over the past 2 years. We would say that those that have implemented a subscription management system typically are much more on top of their numbers than others. And these systems have gotten quite sophisticated. Now, just to put out a few names in case you don't see what I'm talking about. So the most famous one, I guess, it's ChargeBee. It's basically a billing system that with built-in analytics. It's American. It's quite expensive, but it's super good. I think a lot cheaper, pretty good as well as ChartMogul. And especially here in the Nordics, we see Unium doing a terrific job.
Yeah.
And this, it depends a little bit what your product is, if it's truly SaaS, which of these, or if any of these are actually suitable, but we can highly recommend it. And then maybe the last point here from me, like, I think if you want to incentivize your company, or if you want to report to your investors, you probably want to simplify the analysis and pick 1 or 2 metrics. And, you see all the big benchmarks, they're usually net dollar retention and annual churn rate. However, for your internal discussions, for learning, for educating yourselves, for applying sound judgment, I actually recommend the opposite. I recommend to calculate every version of the relevant KPIs that you can get a hold of. So you can calculate churn, of course, in terms of revenue, how much revenue have I churned. You can also calculate logo churn. Now, that's an obvious one. And I would say revenue is what matters, but if you churn many small customers, that might also give you an indication. You can calculate it for different cohorts. You can calculate it with or without the consumer price index, which is one of the questions. Now, of course, the conservative approach would be, well, you take the consumer price index or the price increases ultimately, you take them out of the calculation and see how much have you grown net of price increases. And at the same time, I would argue if you include price increases, it shows you how effective you are, how powerful you are in implementing price increases. Yeah. So again, I think it can, all of these versions and variants of the calculation can give you clues about, you know, where the problem actually lies. And now once you've done that, once you've kind of analyzed and segmented it and dissected it, then you can take it to management, investors, customer success team, and discuss it. That's how I would do it.
No, I fully agree. I think data takes away the discussion. It makes it clear. It helps you bring attention to this. So I fully agree with that. But before we wrap up here, maybe we should also talk about how can we actually make a dent in our NRR? How can we actually fix churn? How can we prevent it from happening? How can we get control of this? Because I think that's a major thing that I experienced it myself as well. We had churn problems, but it was like a black box. Okay, what do I do now? I want to lower my churn. How can I go about doing that? And I think this is where what we do at Startdeliver and what I've been doing many years now is working with a model similar to, like, you have a model for sales, you have a model for marketing. We have a model at Startdeliver for how to operationalize customer success, to actually make it predictable. And how we do that is basically we have I mean, we talked about NRR. That's the end game here. We want to improve NRR, but we don't improve NRR by just talking about it. We need the data, but we need to start earlier, basically. And what people sometimes forget about here, it's that there is customers behind this, right? The customer will stay with you for a very long period of time if they get a lot of value from your platform. And that value needs to be increasing. What was good when they signed up as a customer might not be good year 2 or year 3 or year 5. And why is that? It's because customers, they have business goals. They want to achieve things. So on the top hand corner, this is what we want to improve. On the left hand side here, we have the customer. And how we define customer success at Startdeliver and at the Impact Academy is that customer success is when our customer achieves their desired outcome through their relationship with us.
Oh, I love that definition.
Yeah, it's
really good.
And sometimes we forget about this, right? We just take our customers for granted. We take the revenue for granted, and then we're surprised that we have high churn. So to really fix churn, you need to put your focus on the customer rather than the actual revenue. And then the revenue will come, which is the irony of this. So we need to focus on, are the customers achieving their business goals? And we need to start measuring this. And that's the below part here, is basically we need to have metrics, real metrics on how the customer is doing. Are they using the platform? Are they achieving their business goals? And if they are doing that, then we know they're on the right track. But if they're not doing that, then we need to fix that and we need to correct that. And then we need the second part of the below operational model here is what we call the processes. We have usually an onboarding process. We might have a retention process, an expansion process, a success plan process, an advocacy process. So we have different ways of working with these customers based on the metrics we measure. And the last part of the model here is the enablers. So we know we have only so many hands or heads in the company. So we need to make this really efficient, and we need to prioritize between the customers based on these metrics. And then we can be really effective, and we can scale this with automations. We can scale this with different other tools in the toolbox. And when we have this in place, then we get the predictable. Then we can start predicting how many customers will renew with us, how many are at risk, how many will expand with us, and that's when we can get in control and start managing our net revenue retention. This was a quick run through of the model, but I just wanted to share that with the audience here, that I believe a lot in the practical things, and this is a model to operationalize and make real impact on your net revenue retention, basically.
Johan, I love this, and I think why I love this so much, it's like every company operates with limited data availability, and then it's very tempting to just work with whatever data you have and ignore the facts that are not measurable.
Right.
But those facts, more qualitative often, they might matter a lot. And so I think that's where you help and, measure the engagement, take data before events occur.
Yeah.
So I think it's fantastic. It's really, really, the sustainable long-term view on building a company. It's fantastic.
Super.
Great. I guess if we want to summarize,
Yes.
then do you want to kick it off, Johan? I
Yes,
mean,
I'll
Ray
kick it off.
Dalio, a
Yes,
favorite of
it's
both of us.
one of my favorite quotes. If you worry, you don't have to worry. But if you don't worry, you really need to worry. I think that's a perfect summary of what's churn when it comes to churn, basically. So I would say I would recommend everyone to worry because then you don't have to worry.
Love it. Then, not surprisingly, I really think, or we believe, that analytics matter. And I think here the word is detailed analytics matter. I've seen tons of analyses that are super superficial or plainly wrong, and they don't get you anywhere. And the latest when you speak to investors, it doesn't look so good if your numbers are off. So I highly recommend to get on top of it. Again, it's not rocket science.
Perfect. And the last part here is basically don't let the customer success be a black box. You can operationalize it and you can predict it. And by that, you can also manage it.
Exactly.
So with that, I think we answered the question we had there. And I think everyone who listened to this and want to reach out and have more questions, follow-ups, want more details, you have our bios. We will share this presentation as well. And we will look forward talking more to everyone out there.
Exactly. So fire away whatever questions you have. We would love to pick them up.
Great. A lot of praise here in the chat. We appreciate that, of course. Awesome. I know we went a little bit over time, so
can you summarize the key indicators for predicting churn in advance from Peter?
I think the best indicators to predicting churn is to basically know that the customer is achieving their business goals with your product. What that usually means is that you need to measure certain activities usage of your platform. The most basic one is, of course, logins, but that's usually not enough. We like to talk about some significant events. Basically, they're doing things in your platform that indicates that they are actually on their track to achieve business goals. So I think that would be one very strong indicator. Otherwise, there are of course many others, but I would say that's a good starting point. In addition to that, you need to be keeping track of stakeholders, so stakeholder changes, both super users, maybe decision makers. If they are changing, new people coming in, that's a very indicator that might lead to churn. But I would say, like, predicting churn, the evidence is very much in your platform, in your product. You just need to make sure that you map it correctly to what the customer is trying to achieve and the goals they want to hit using your platform.
And if I could add to that from my previous experience, that was enterprise technology. Our average contract value was $500,000 per year, so pretty huge. But we made sure we met every customer every quarter in person around the world.
Yeah.
This is of course an extreme case, but if you have that type of relationship, you're not going to pick up from a few data points everything.
No.
Some things really only come out of conversations, and only if you orchestrate those conversations, maybe a tiny bit provocative, it seems like you have not been using it so much, and then they might open up and say, well, actually, and
Exactly.
Then you find out, right? So those meetings should not just be for drinking coffee and having a good time.
No.
You want to surface what's under the surface.
Yes, I agree fully.
Great. Another question. Can you explain the nature of lagging churn and how to calculate lagging churn? I think that's for you again, Johan.
Yes. No, I think the lagging the lagging part here of churn is that, first of all, depending on the length of your contract, but if you have a 12-month contract with your customers, it's basically 12 months for a single customer. It takes 12 months before if they renew, basically. And if you sell a more complex enterprise type of product, maybe that 12-month period goes quite fast, and they just renew, even though they maybe have not really started using the platform fully and started getting full value out of it. And then you're into the second period of this contract with this customer, and then they're still not up and running, and then they churn the end of that period. And that's actually 2 full calendar years now if you have a 12-month contract before the churn is in the financials, right? So that's explaining it from one customer perspective. But then, of course, you have multiple customers. So you both have that lagging part that it takes time before it hits the numbers, and it can be even 2 years or even more in some cases.
There was a follow-up to this. How can we create awareness in a company where everything looks fine right now, so they are not worrying too much for churn?
Yeah, and I think one of the big aha moments when one of our customers start using Startdeliver is when we show them the actual data on the usage of their platform in Startdeliver. And it's always that our customers, they believe the adoption and the usage of their platform is on a much higher level than it actually is. So again, data brings clarity to these things. So, and I experienced this myself. I was really optimistic about my previous company and the product there. But when you looked at the actual data and saw how little it was used in some cases on customers we regarded as really happy customers getting a lot of value. So the data brings a lot of clarity. And I think that's a way to bring attention to this internally and say, hey, we're doing great in terms of bringing in customers, but the adoption of our platform and the full effect of our platform is very low in many customers. And if we don't fix that, they will churn. And that's, I think it's very important to bring data to the table here and share with the management team and say, but I think if we work with them, if we meet with them, if we have business reviews with them, if we do training with them, we can get them going again.
One thing actually, and Johan, I would be curious to hear your perspective. One thing that we've seen is, so let's say, it's usually good practice to add a lot of new features and bring good news to your customers. At least 3 months, you say, hey, we brought this new feature and that new update, and great. So good news, usually it's helpful. But then sometimes you find, and I know that also as a customer myself of SaaS systems, I buy the product as it was when I bought it, and I don't actually start to use any of the new features because somehow the messaging doesn't get through to me.
Exactly.
And I ignore it, and it's somewhere in the newsletter and I don't realize it. So I think when you see that new features are not being adopted by existing clients, that's probably a sign that something in the communication is wrong.
Yes. No, I fully agree with that. And we focused a little bit on churn today, but expansion is a huge part of NRR as well, right? And if you have low expansion, that's a bad sign. That's customers like you should be using more and more of a SaaS product if you're a growing company, because then it means you probably have new demands, new needs, and so on. So expansion is actually, if you have low expansion, that's not only a bad in terms of you missing out on revenue, but it's also usually a stagnating customer.
Yeah.
So
and actually, I want to see that in both ways, right? So one is, of course, you want the revenue, but you can also say, okay, is the customer expanding just in usage, even if you're not charging for additional features, right? And if they are not, it means like your communication is not getting through, or you're not delivering value, or they're plainly disengaged already because they don't even bother looking into all those great new things that you're shipping to them.
Yeah. No, exactly. So it's also a way to find ways to have add-ons and improve your product offering, basically, also looking at the data.
We have a very engaged participant here. So Juan is asking, lastly, a few tips to measure outcomes. when you have thousands of clients and you don't have an individual success plan? I can quickly start. I mean, first of all, I guess you cannot have an individual success plan if you have thousands of smaller clients, I guess, is what's implied here. My argument here would be first, segmentation. You will find patterns and similarities, I guarantee you, among your thousands of clients. And then second, you can treat them probably as one group of similar behavior, and then kind of mass customize your messaging.
Yeah.
AI is fantastic here, but you don't need to take the AI route. You can simply have, I don't know, 10 or 20 segments. That's, about as many enterprise customers I think a small or medium company can very individually cater to. And
Exactly.
then you just cater to them, with bulk emails, but somewhat personalized to their needs. Use cases, situations is what I would go by. I would not segment so much by size. So you want to go by what's the need of the customer, what's the problem of the customer that you are solving, why did they buy it in the first place? Size might be easy to calculate, but it's not what matters here, because what you want to achieve is that your messaging the effect you want to achieve when you reach out and you kind of target the problem of the customers, you want the customer to say, yeah, exactly.
Yeah.
Exactly. That's how I feel. And that's my problem. And you won't do that if you just say, well, you're 5 million in ARR and you have 50 or 100 employees.
Perfect. That was a super answer. Fully agree with that. Good question as well.
Yeah, indeed. Wonderful. We still have 3-4 minutes. So if somebody has held back, please fire away. Now is the time. You see, Johan and I are enjoying this. So
Of course, this is great.
Don't be shy. Wonderful. Tony is asking, how often is too often when bulk emailing customers?
Yeah.
How long is the string, right?
Exactly. No, but I think you hit it on the nail there with the you need to make this relevant, right? Everybody gets spammed with emails in their inbox, but if you have a great understanding of the need or what this customer is trying to achieve with your product, and you can communicate that in an email, you can do wonders by bulk emailing if you have a really good message, basically, that responds to that person or that user.
Yeah. And one thing that I think is extremely important here to calibrate is how much of their workday do the recipients work with your product, or of the work week.
Yeah.
So you might have something that the customer spends 10 minutes a week on. Then it's probably, then a weekly newsletter would be way too much. They cannot process it. Monthly would be the most. The other way around, I mean, again, my previous company, our customers were working with our product 6 hours a day. And so weekly newsletters were absolutely relevant because we were the only tool almost that they were using.
Yeah.
So I think it depends. Like I would think about it, not share of wallet, but share of time.
Yes.
As the indicator how often or less often. We got another question. Is there a particular NRR percentage or threshold below 100% that would be a particular alarm bell for you? Is there a tolerance that you expect to see in B2B SaaS? Good question. So we look at levels of NRR and churn and at trends. And anything below, like if something is 95% and stable, I think we can work with it as long as kind of new sales are good. Again, it's all contextual, right? If your net revenue retention is not ideal, but still okay-ish, then of course the new client acquisition suddenly becomes more important. And with that, the question, how expensive is new customer acquisition? Because you're compensating something that is extremely cheap, usually maintaining customers, with something that is quite expensive, acquisition of new customers. So that balance matters a lot. And just to throw some data maybe also into the game, I took this from OpenView Partners, which by the way does fantastic SaaS benchmark reports, pretty US heavy, so not 100% applicable. But I would say here you see the bottom quartile, so bottom 25% threshold is, depending on your size, around 90% net dollar retention or net revenue retention. And so that kind of gives you a clue. If you're below that 90%, I think you really need to do work. That would be my very simplified answer, because also this 90% is pretty consistent across sizes, ARR sizes of the companies.
Yeah, I agree with that, and I think it's important to see what phase you're in as well as a company. So these ARR brackets are good, because if you're in a early stage, you might have a different scenario versus when you're more established and so on.
Yeah. You also see here, by the way, I guess some of our listeners are actually rather early stage companies. I mean, the expectation on growth, but also net dollar retention in early stages is quite important. So you see the 120% is a lot higher than for any larger size.
Yeah.
And one way actually that, and I know it gets technical in the last minute, but one thing that I would actually recommend to do. So here's the interplay of product and numbers at play. So many companies have paid trial periods. Say they have a 3-month paid usage of the product, maybe product-led growth. And then after that, it turns into 1-year contract or something. If you include paid trials, paid trials will show up as customers usually in your analysis. So if you have paid trials, suddenly you have tons of churns after 3 months, and it will destroy your numbers. Now, the technical solution to that would be you don't charge for trials, you just give a free 3-month period, because then it doesn't ruin your numbers. But beware that, of course, means you're missing out on the revenue, which you're obviously able to charge. So the answer is not to charge. The answer is to take those paid trials out of your statistics. I think it's a fair and legitimate skewing of numbers. It's the right thing to do. But of course, be transparent about it.
No, but great. I agree.
We are at the end of our session. Oh, we got one more question. Oh, we are taking that, Johan, right?
Yes, of course.
Yeah, okay. Eva is asking, what metrics would you suggest for monitoring customer health as a predictor of churn? Should this be a composite score, for example, weighted score composed of usage and CSAT and value perception, or a single metric?
Great question. And I'll basically, what I believe a lot in simplicity and helping us take decisions. And when you mix a lot of things into a health score, you actually create complexity, because if you have a score from 0 to 100 and the score is 72, so what does that mean, right? Does that tell you anything? No. And then you have to go down one level and understand what builds up to the 72. So Startdeliver's take on this is that we separate. So we have a usage health that tells you how they're using the product. We have a feedback health, basically telling you, are they happy? What are they responding on our surveys and so on? And we also have a sentiment score from the CSM, basically. And when you see those together, then you understand, okay, low usage is doing really well, but we got a bad feedback here. Okay, we need to dig into that. So I believe a lot in simplicity and helping us make decisions and prioritize. So my recommendation is to not put them all together, and instead keep them separated, because they mean different things.
100% agree. It just shadows over the insights. It makes them all very, very unconcrete. In external communication, I would also keep it simple, but there it actually means you don't want to flood your investors with 10 KPIs unless they ask for it. There you probably want some sort of composite score. And to make that meaningful, I would probably show a time series. So a composite score can be quite, unclear what it means. So then you put a time series to it and show how it's hopefully improving over time.
Exactly.
And then you have a good case to show it to customers. Again, for learning, for internal judgment, disaggregate, because you want to get to the bottom of the problem.
Yeah, I agree.
So 100% agree.
And the trend is important to see that we are doing the right things.
Yeah.
So I agree with that.
There's a question if this event got recorded. It has been, and if you signed up, then you should be able to access that recording. Wonderful.
Perfect.
Thank you, all of you, very much for your fantastic questions.
Yes.
And those of you who
this was
stayed
super.
5 minutes longer, that you stayed 5 minutes longer.
Awesome. Thanks, Jannis. This was great.
Johan, great.
All the best.
Have a wonderful day, everyone. See you. Bye.